Real Estate and Mortgage Show, your go-to spot for everything home buying, selling, and financing on News Talk 580 CFRA.
All right, welcome to the show, everybody. Can you guys believe this is the last show of 2025?
That's crazy, man. I hope you guys had a wonderful Christmas, by the way. It was beautiful time. Beautiful time.
Family time. Hopefully everybody got to spend time with family. And Paul, you looks like you had a lot of turkey, so.
Oh, my. I will tell you.
I couldn't let that go.
I will tell you, Frank, in our house, because my girlfriend's Slovakian, we don't even have turkey. We have chicken schnitzel, pork schnitzel, we have dumplings, we have duck.
That explains it.
Yeah. That explains it, yeah.
But I will tell you, this is literally my favorite time of the year, and I'll tell you why. Probably for you too, Frank, but December is probably my most stressful month, right? Like we have office goal planning with the team. We have management meetings, team planning, Christmas parties. I mean, let's be honest. I organized a wedding this year with the help of Angie White and Petra. Like we organized a little wedding in Montebello. You know, gifts.
Which was great, by the way.
Which was amazing.
What, you got married and I don't know about it?
Oh, gifts for everybody in the team. And then
Petra's listening, right?
Yes, I do.
But then I got gifts for the family and this, like, it's so stressful. And I find once, Boxing Day hits, it's like, I can breathe again until the new year. But then, you know what? I sit around and I'm like, wow, this is really, really boring. And then come January 2nd, I'm like, I wish I was back to January 26th and 27th and 28th. But
can't wait to get back to it.
Anyways, it was a very, very stressful, productive December. And it's nice to be in this nice quiet time where we can start to work a little bit on the business, but slow down and breathe with family.
Well, we don't have numbers yet.
No.
I mean, it's only the 27th, so we won't have the numbers until sometime in January, depending on...
Even next show, though, I think it's January 3rd. I think we probably won't have the numbers there either, but we'll see. We'll see. Yeah. Maybe there'll be some squeak out, but we'll see.
But I think we'll take this time today to kind of look back at 2025 and kind of recap what happened during the year with real estate and mortgages.
Great idea. Yeah.
And the world. I mean, the world is just upside down. I mean, it's been a turbulent year, I think, on many fronts. And whether it's the real estate, the mortgage, or just in life, it's just been a turbulent year.
Wouldn't you say that it's been a turbulent almost half a decade, really? Like, so, we got COVID and we have, what happened with the mortgage rates and the interest rates and, what happened with the real estate market going insane and then bottoming a little bit. Like, I think it's been a really tough half decade, to be honest with you. But this year, much like the last couple of years, is a lot of uncertainty. Like it's been a very fluid year. It's been a lot of uncertain what's going on. And I think there's been a lot of happier mortgage holders with the rates coming down, but I think there's been probably more grumpier home sellers because the market this year has just been, it's been decent, but
the prices aren't rebounding as much as I think some sellers had hoped. Is that what you're kind of?
Yeah, like we ended last year at $679,000 as an average sale price. We're going to end this year, at the end of November, we're just at 700. So, where are we going to end? 700, 699, 702, 703, somewhere like that. So, we've come up. I mean, we'll be up 3%, which we've talked about, Frank, many times. Like 3%.
Normal.
It's a normal market. But I think when, you're someone who went through that 22% and 19% and 8.4%, and like we've been spoiled over those years. Home sellers have. Home buyers have been a struggle. But we've been kind of spoiled. And I think that... we didn't rebound like we did. I mean, we looked at, at the end of start of 2022, we had an average sale price of 740 and change. Now we're 700, so we're going to see, and Frank will talk about it. He's talked about it already many times. We're going to see some mortgage holders come up due very shortly that it's going to be a struggle for people. Very good struggle.
Well, and I think that'll be our prediction show on the next one. But
for next year,
we'll be talking a little more about 2026. But how did you find 2025? Like you got a lot of panic.
It was good. I mean, a little bit of a roller coaster throughout the year as far as interest rates are concerned. Obviously, the tariffs that came into play really impacted the markets quite a bit, and the bond markets kind of shaking its head, saying, I don't know which direction to go, because as we all know, President of the U.S. says something and all of a sudden the markets react, whether it has any economic data behind it or not. It doesn't matter because he does what he wants kind of thing, regardless of whether it's the right thing or the wrong thing to do for the economy. So, I mean, Americans are complaining that costs of everything is higher. He comes on the air a week and a half ago and says that, nope, Americans have saved money and they're paying less for everything, yet Americans are saying a different thing. So this is the kind of world we're in. When it comes to interest rates, from the beginning of the year to this year, we saw Bank of Canada drop quite a bit, 1 percentage point in 2025, which is fantastic. We expected it to be anywhere between 0.5% to 1%, so we got on the high end of it, which is awesome. Yeah. Didn't help on the fixed rate side, though, because fixed rates have probably only come down about 0.5% from the beginning of the year. So we haven't seen the same amount of interest rate declines when it comes to fixed rate mortgages.
And that's because they're tied so much to the bond market, correct?
The bond market, which again in the U.S., the stock market has done very well in 2025, and people that especially if you got in after April, because in March and April there were the big drop, and then all of a sudden it skyrocketed. But at the end of the day, I think for Canadians, the ones that are buying this year their first home, not horrible. I mean, you're getting interest rates in the high 3s, low 4s. It's not horrible. Traditionally, that's been a good rate, except for the people that have mortgages that are coming up for maturity. The ones that are really going to feel it, the ones that started to feel at the end of 2025 and now into 2026 that had interest rates that start with a 1 or a low 2, all of a sudden now you're facing interest rates that are in the 3s and 4s. So that's a little bit of a big hit for some of the Canadians.
I think we're excuse me. I know next show we're going to get into predictions for 2026, but I think we've had a very sluggish end to 2024. I think October was very 25, sorry. Yeah. 24.
Paul's in the time warp still here.
I'm still recovering from Montebello and Christmas, so, but we've had a sluggish end to 2025. I mean, October was super strong. November was really weak. I mean, number of sales was down 18%. December's, in a couple of weeks, we'll have the numbers out for December, and our team will probably be on par where we were last year, but I've talked to a lot of agents and a lot of realtors who have said, this December's been terrible. So who knows where it's going to end? But I'm interested to see when the numbers do come out, where we did and what we did in December, and is it going to carry into 2026? Like, are we going to have a sluggish January and a sluggish February, which those usually set up our year? Our Jan, Feb, Marches set up our year where the year is going to go. And, there's a lot of predictions, and you know what? We'll wait till the next show to do all our predictions. We're recapping this year. So, but to recap, honestly, I believe that we talked about it. Our average sale price is probably going to be up about 3%. Our number of sales will be up probably, 1.5 to 2%, which that's not bad. I mean, it's not terrible. It's a typical Ottawa market. I mean, we're not going through the COVID years, but at the same time, we're not underwater. I mean, we went a couple of years ago, we were down 5.5%, which is not normal for us. So, So I think that, like the people here in Ottawa should be pleasantly surprised that we've had a decent 2025. And, we'll get into a little bit later. We'll get into, what market segments, townhouse, condos, all that, what they did and how that market segment did and the areas of the city and things like that. We'll get into that, I'm assuming.
But I feel like one of the common themes that we talked about this year was how this was a much more normal Ottawa real estate market. Going back to 1918, 17, those years, this felt more like those years, not the craziness of...
Well, except for one thing. Again, we've had good numbers, and I say that 2025 has been a successful year in real estate, and I say it because investors are out of the market because really it's hard to cash flow any investment property. And in 2017, 18, 19, people were able to buy investment properties. You were able to buy a townhouse and be able to cash flow it based on the rent that was coming in, number one. And number two, first-time home buyers are still on the sidelines because the interest rates, even though they've come down, they're not quite at the level with the cost of housing these days and the cost of everything else around them. They're not quite into the market either. There's a whole bunch of them sitting on the fence. So considering those two factors, I really believe that real estate actually had a decent year, despite the fact that there's more listings than ever before, than many years. I mean, I remember the years of 12,000 listings, so we're not quite
we're
there
not even
yet.
Close to that yet.
We're not there yet, but considering everything that's going on around us, I think it's been a pretty decent year for real estate.
I do as well, and I'm so excited for the prediction show next week because I know what's going to happen next year. I totally know. But keep in mind, this year we saw the days or the months of inventory climb. Right, single family homes sat on the market for 4 months, townhomes 3.1. Condos, 7.1. So the condos killed us this year. But what are they going to do next year? What are towns going to do next year? What's the hot product next year? But I think our months of inventory was the thing that really hurt us this year. Was how long things were sitting on the market.
Well, so. I don't remember how did the year start again with the months of inventory. It was like 2.5 or something.
It was decent.
Range?
Yeah, it was quite decent, the months of inventory. In fact, I have it here, but I'm going to have to put my glasses on.
They're getting thicker every week. Those glasses.
Yeah, we were at about 3 months of inventory, which is not terrible, but we've climbed. Like we're going to end around 4, which is a balanced market. But you know what? We did have parts of this market that was in a bit of a seller's market. We had some that were imbalanced, and we had some that were in a strong buyer's market. So all in all, like Frank said, I think we should be happy with the year. I think it was decent, not strong, but decent.
Yeah. And Frank, you have the same feeling with it.
We had a great year on the mortgage side. But again, we're a different market because we're not reliant on someone selling their homes, right? We're reliant on mortgages coming up for maturity and helping people with their maturity and giving them advice that, sometimes the easy thing is just to renew the mortgage the way it is. But if you're carrying a whole bunch of other debt outside of your mortgage, maybe you've got the equity in there to be able to tie that in there and maybe relieve some of the financial stress that you might be carrying. So a little different for us. We've had a good year. 2021, we always try to go 5 years back because mortgages generally are 5-year terms.
Sure.
So 2020 was a good year, and we did a little bit better in 2025 than we did in 2020. 2021 was a record year for us. So we've got big shoes to fill in 2026, obviously, because we've got a lot of those mortgages coming up for maturity. And we feel a lot of Canadians, a lot of our clients need that advice more than ever because they are in a situation where they built up some equity because they got lucky that they owned a home in 2021 and the prices were appreciating throughout the year and into 2022. So they've got some equity built in, but they may also be carrying a lot of debt, or they may have that financial stress of just making ends meet, just barely making ends meet, and maybe there's some good solutions there for them to be able to get back to feeling good.
You know what? It's funny. Over the last 5 years, the real estate market was almost like the stock market. If you timed it right, you hit the home run. If you didn't time it right, you're in trouble, right?
5 years ago. But now I think, and people try to tell me, Paul, and I'm sure you get it too, maybe we're going to wait until the spring, we can get more. But if you're buying something else, that means you're going to pay more. So it comes on both ends. Once you're in the real estate market, I've always believed, stop timing it. Because whatever you're going to sell for, if you're going to sell for more, the likelihood is you're going to pay more for the new one you buy. If you're going to sell for less, well, you're going to get a good deal on the one you're going to sell as well. So you might as well just do it when you're ready to do it, as opposed to saying, I'm going to wait until the spring because I think I might get more money for it.
And
have a question, head over to realestateandmortgageshow.com and submit your question there. We'll get to it on air on the next episode. We'll be right back after the break. Welcome back to the show, everybody. Again, if you have a question, just head over to realestateandmortgageshow.com. You could submit your question there. Paul and Frank will answer them as soon as we get them, but we'll also read them on air on the next show.
Awesome.
Yeah, great to see those questions come in. And there's some really good ones and some that are really challenging and awesome. They're things we've never talked about on the show. So you're giving us some new information that we're able to share with others. So thank you very much for sending those questions.
To be honest with you, there's so much coming out right now that's happening, with the, first-time home buyer rebate credit to, what's coming up with Bill 60 to, there's just so much coming up that people are asking just great questions. And it's and you know what? Listen, there's times where people, we'll actually get it in the question. We're like, listen, I don't care to be on the air, but I want to know about this. And so that's why we put this website out there, is because there's a lot of times people want information and want these answers, but they're scared to call in. And, I'm shy like that. I'd be scared to call in, but,
You've got a unique voice, though, so people would know who you are.
People would recognize it instantly.
You know what's funny is I didn't even know I had a unique voice until, it's like Steve Greger. Right? Like when Steve Greger talks, that's Steve, Yeah. I didn't know that, but people apparently, I got to be very cautious, because no matter where I am, like, we were in Montebello, and I opened my mouth, and someone's like, "You Paul Rushforth?" I'm like, "Oh God, put down the beer, put down the beer." Yeah.
Yes, I am.
Well, and as part of our recap, that's one of the sad things this year is we said goodbye to Steve hosting the show this year for him to go retire and spend a little more time with his family.
Good for him.
Speaking of Steve Gregory.
Yeah, good for Steve. We've we've been friends with Steve and like very close friends with Steve for 18 and a half years. So it was devastating, actually. Now, you filled in wonderfully, Greg. We're not going to say that, but Steve's a talent of his own. Like, he's in a different echelon than what most people are. And, well, you hear him all over the radio. You hear him. He was great. I will tell you the one thing, though. Steve did a ton of research, but you do a whack-load of research, man, which is awesome. I mean, you keep Frank on our toes. For years, we'd just show up and have breakfast, and we're like, what are we going to talk about? I don't know. We'll figure it out when we get on the air.
Steve's got it all figured out, right? And you're no different, except for you give us a little bit of a heads up with emails during the week, which kind of helps a little bit. But sometimes just getting those questions and being able to answer them really shows that we're the pros in the industry, because sometimes you can prepare an answer. You got to do some research, where I think in our case, we can answer them because we know what we're talking about in our business. So we don't have to do a lot of research. But there are questions that we get through the realestateandmortgageshow.com that require us to do a little more research, because we've never encountered some of these scenarios. So,
there's been a couple where I've said to Frank,
really good.
That one's yours. I don't know this one.
A few weeks ago, that crypto question,
it was brilliant.
Came in. That was a fascinating question. I had never even considered. Can you?
I've dealt with it, though, but I've dealt with it throughout the year, because I've had a few people call me about crypto and, hey, what if I use crypto for down payment? And so I had to do some research on it throughout the year, and it's not quite there yet. So crypto's not quite accepted by banks and lenders as down payment. So
you know what? You say that, though, Frank. I mean, I'm watching this show with Ryan Serhant called Owning Manhattan, which is phenomenal if you haven't seen it. And in one of the episodes, there's a guy who's selling, now keep in mind, they're not selling $500,000, $600,000, $700,000 homes. They're selling like 60, 70, 80, $100 million homes. This guy was selling a commercial building, and she said, you know what? I think the easiest way to get this thing sold would be sell it with crypto. Like, let the buyer pay crypto, because the buyer's going to be 20, 21, 30, 31. You know, that's where they're involved in the
young crypto millionaire.
So he said to her, he turned around and said, no problem, I'll accept crypto, but you're taking your commission in crypto. And it happened. She sold the building and accepted crypto, and he accepted crypto. So it's coming. I mean, it's already in the States. So it's
what the issue with crypto is, though? You don't know where the funds have come from, and that's the issue. So it's a money laundering issue more than anything else. And that's why the government, a lot of people think the government wants to know because they want to tax it. It's not about taxing. It's whether the money comes from, it's partly tax. Don't get me wrong. They want their tax revenue.
Definitely.
But they also want to know that the money has come from legal means. So in other
legitimate
words, legitimate sources, and not, listen, if it's an inheritance, if it's you sold a company, you sold stock, that's okay. What they're worried about is that the money is being laundered, and that's the big issue with crypto right now.
The other thing I want to bring up is probably about a month and a half ago, I talked about where the real estate industry is actually going. And with AI and the advancements of AI, I said, you know what, eventually you're going to be able to put on a pair of glasses and literally walk through a unit. Mm-hmm. And, when I said that, I had people afterwards saying, what are you talking about? Like, you're out to lunch and this and that. In this show, they put on these headsets that you could you could be on the 55th floor and walk out and look at the view and basically go through the unit. I'm telling you, within the next, I said 10 years, in the next 5 years, that will be here, where you could literally have a pair of glasses on and walk through a house or walk through a unit.
You can already do that on our tours.
Exactly. You can on our tours.
You can. Like, if you've got a set of the
3D ones,
3D goggles, you can go on to all the tours that we do of the houses, the 3D tours, and you can put those on and do a little walkthrough with it.
Should real estate agents be worried about them becoming more obsolete? Or maybe less? I'm not talking about all real estate agents becoming obsolete, but because the concern with artificial intelligence is not that it's going to get rid of all jobs, but it's going to cut jobs in some industries as much as 25, 30%. I wonder if the same thing might happen on the real estate side.
100%. Everyone needs a human touch. Everyone needs you need that human touch. And I said it a couple weeks ago, AI is not going to replace realtors. Realtors who use AI will replace realtors who don't. 100%. Right. It's already happening. I mean, I'm seeing, even on social media.
I mean, AI has to be the the word of the year or the phrase of the year.
Greg, I laughed.
This year.
I laughed because right now there's this thing going around social media where you could do an image of yourself with AI with a lollipop in your hand. I'm sure you're seeing this on Facebook, and everybody's doing. They're like, "This is so cool! I can clone myself with AI and this and that." I'm like, "Yeah, Greg did that about 8 months ago." Like I got so many clones out there, and my voice clones out there. It's unbelievable. Like if you're not in like advanced in that stuff, it's like when the internet came out. If you didn't embrace it, you were lost. You know, when everything comes out, when AI came out, like if you don't embrace it, you're lost, man. You're lost.
But there's people worried about bubbles. I mean, there was the .com bubble, obviously, that happened in the early 2000s, and people are worried about the AI bubble as well. And I don't think it's a bubble, but I think people are investing sometimes too much into it. And I agree with you. I think you add it to your business, but it doesn't replace your business. You just incorporate it into your business.
Yes. I agree with that, Frank, but I think that's entirely limited thinking where you're thinking AI is not going to be that big. AI is going to be everything.
It's big. It's already big. It's already huge. I use it all the time. And I think it's fantastic to help me word emails, to help me. I think it's fantastic on that front. I'm just saying it's not going to replace anyone, like you said. I think, but people that don't use it, I think, will fall behind.
Well,
on all industries.
What you don't realize, Frank, is I'm not even here. I'm in Florida. This is AI. This is AI right now.
I'm not sure that's
Paul
the right
in the
thing
studio.
to say that you're
Paul
in the
is
USA
in the
right
studio.
now. Canadians don't like that you're in the USA right now, so you're not in the USA.
I'm there for work. But
yeah.
But listen, I will thank Greg though, because when Greg cloned me, he made me pretty skinny and looking pretty good. He downplayed the gray hairs and put some abs on me. It was perfect.
So then, could we have the clone in the studio instead of the real Paul? Because
the clone talks more. I'll tell you that.
The clone has a lot to say.
Wow, that's hard to believe.
Yeah. No. So Frank, how did you see this year the whole AI, bubble affecting the mortgage industry, or has it? Is the mortgage industry just not there yet?
Not yet, but they're starting to implement it. So we're starting to hear from lenders that are implementing AI into reviewing documentation. They're reviewing pay stubs. They can review a pay stub with AI, and AI will give a summary of what the pay stub says. So, which is good because what we've heard since COVID, the last 4 or 5 years, lenders have told us it is really difficult for us to find qualified people. So we're getting people that aren't as qualified. We would have never hired them in the 2018, 2019 prior to COVID because they weren't experienced enough. They weren't good enough to fit in this category. Yet, because they've struggled to find qualified people, they've had to teach people more. And now artificial intelligence will help them be a little bit more efficient, hopefully. And we're hoping that too, because for anybody that's tried to get a mortgage over the last 3-4 years, it's overkill sometimes on the documentation. It's overkill on the speed of quality of service that we get sometimes from lenders, and not because they're not trying. Let's call a spade a spade. Most lenders are all about profit, so therefore they hire as minimal as possible, and they pay as minimal as possible. But at the same time, then it hurts on the service side for us. So on our end, we're constantly having to battle with lenders and getting them to see what we see. And then, where we used to be able to just send it in and it would be signed off, now they're looking at it saying, well, how come this week you only work 43 and a half hours? You're supposed to work 44. That kind of little Mickey Mouse stuff that happens that never happened before, and now they're looking at everything.
And what's causing that further diligence in it? Regulators
are becoming stricter.
Fraud.
FSRO. There's a lot of fraud out there, specifically in the GTA, a lot of fraud, but they're watching that. I mean, there's some neighborhoods that some of the lenders won't even lend to in Toronto, in the GTA area. Like
probably condos, right?
No, it's not the type of property, the area of the city where there's so much fraud there that they've just decided, you know what, anything that comes from this municipality, we're not touching it. We're not touching it because the likelihood is very high that there could be fraudulent documentation. So, but in Ottawa, we haven't seen that. We've got a healthy market. We've got a healthy real estate market. I believe that we're nice and consistent, which is what Ottawa's always usually been. I mean, with the exception of the COVID years. But apart from that, I mean, we don't see a lot of fraud, but sometimes we get treated because the underwriters are all based in the GTA. So we get treated like they treat the ones there. And I always fight that battle because it's like, we have government employees that have been there for 19 years. It shows up on the credit bureau. We give you a letter of employment. We give you a pay stub, and you got to wait for a verbal. Good luck trying to get a verbal from an HR department these days. It's impossible. Why do we need it for? It's overkill.
Right. Have a question? Head over to realestateandmortgageshow.com. We'll be right back after the break.